Back after the short tea and coffee break. We are definitely having a wonderful time here at the Nepal Investment Summit 2019 with inspiring, motivating, encouraging stories and discussions about investing in Nepal. All the sessions, I must say, have ended on a very, very positive note with a lot of investors who have already invested in Nepal sharing their positive and happy stories, sharing big numbers, and maybe inspiring all of you also to join on that bandwagon and be a part of investors in Nepal. We're now beginning our fourth plenary session of Financing for Infrastructure Development, and I would like to invite our moderator for this session, Mr. Sujeev Shakya, who is the CEO of BEAD Management, on stage. BEAD is a Nepal-based international management consulting and financial advisory firm. Mr. Shakya also serves as Senior Advisor Nepal to Bar Group Asia, a Washington, D.C.-based advisory firm. Mr. Shakya also writes and speaks extensively on business, development, management, and leadership, and is the author of a very popular book, Unleashing Nepal. Next, I would like to invite our panelists on stage. Mr. Srini Nagarajan, who is the Managing Director and Head Asia of CDC India, a wholly owned subsidiary of CDC Group, London, based in Bangalore since 2013. I'd also like to invite on stage Mr. Samuel Joseph, who is the Chief General Manager of Exim Bank India. He has over 25 years of professional experience in international trade and investment finance, project finance, structured lending, liability side management, including treasury, and raising of resources. We are also pleased to have Mr. Nishant Kumar, the Regional Director of South Asia at Guarantee Co., Singapore's office, where he heads the company's business for South Asia and is responsible for the origination and execution of transactions in this region. We're also pleased to invite Mr. Gert Finau, who is the head of the Asia team at the Energy Department of FMO, the Dutch Development Bank. The bank supports sustainable private sector growth in developing and emerging markets by investing in ambitious entrepreneurs. The bank believes that a strong private sector leads to economic and social development, empowering people to employ their skills and improve their quality of life. It's our pleasure to invite Ms. Elke Pfeiffer, the Vice President at Allianz Investment Management, on stage as a panelist for this session. She's responsible for global investment performance measurement and reporting for more than 50 Allianz entities worldwide. Last but definitely not the least, I'd also like to invite Mr. Don Ik Lee, who is the Director General of Investment Operations, Asia Infrastructure Investment Bank, AIIB, on stage as a panelist. He has also worked for Korea Investment Corporation as Chief Investment Officer and Head of Alternative Investments. With our moderator and our panelists all set on the stage, it is my pleasure now to request and invite on stage our special guest for this session, Ms. Keiko Honda, the Executive Vice President and Chief Executive Officer of MIGA, Multilateral Investment Guarantee Agency, the political risk assurance and credit enhancement arm of the World Bank Group. May I now request Ms. Honda for her special address.
Thank you. Your Excellencies, honored guests, good afternoon. Namaste. I'm honored to speak at this important event launching Nepal into a new period of positive interplay of growth and investment that benefits the country's economic development and poverty reduction efforts. It is a great pleasure that I am here today representing the Multilateral Investment Guarantee Agency of the World Bank Group, together with my colleagues from the World Bank and IFC. Like Hart Schiffer spoke yesterday, and Hans-Peter of IFC spoke earlier this afternoon, we, as a World Bank Group, commit to work with the Nepal and support their vision to be realized. Nepal has been a rising star in South Asia with FDI flows reaching a record high. This confirms Nepal's effort to improve its investment climate and became a competitive investment destination for multinational companies. MIGA sees Nepal as a country that offers lucrative investment opportunity, but also some challenges. Foreign investors consider a broad range of factors in their decisions to invest, such as domestic market size and growth, competitiveness, availability of skilled human capital, physical infrastructure, level of the regulation for business, and stability of government. A recent survey by the World Bank, the Global Investment Competitive Survey, found that a political stability and business-friendly regulatory environment are the most important. But private investors also need reliable and affordable infrastructure worldwide, not just in Nepal. According to the Global Infrastructure Outlook, which is published jointly by the Oxford Economics and the G20's Global Infrastructure Hub, the total infrastructure investment gap around the world is estimated at $97 trillion by 2040, with a new infrastructure investment in 2017 at $2.5 trillion. You can see the potential expansion of the infrastructure market. So it is that Nepal is in a period of political stability and is tackling reforms to improve its regulatory environment. This is where MIGA steps in. MIGA is here to help private investors mitigate non-commercial risks such as currency incompatibility, expropriation by the government, breach of contract by the government, and war and civil disturbance. Around the world, MIGA is currently supporting over $23 billion of cross-border private investment, or FDIs. On behalf of the World Bank Group, I'm very pleased to announce that Board of Executive Director of World Bank Group has approved a MIGA guarantee and IFC financing along with the World Bank IDA support in UT1 hydropower project. MIGA guarantees are supporting Korean investments of $145 million in Nepal, which is expected to provide power to about 9 million Nepali people. The project is of a strategic national importance and will be one of the largest FDI in Nepal to date. It took many years and a lot of work across the World Bank Group to bring this project to realize. In addition to the MIGA guarantee, IDA, which is the trust fund of the World Bank, supported the development of energy sector, and IFC provided both equity and debt into the project, not to mention mobilizing additional sources of financing. Of course, none of this would have been possible without the strong support of the government of Nepal. This is a big milestone for Nepal, and we hope that we can celebrate many more milestones in the future. We all know private sector investment can play a key role in infrastructure and energy. With government budget needing to respond to multiple demands, there is an opportunity for private sector to step in and maximize finance for development. This is a principle that we are advocating in MIGA and our sister agencies within the World Bank Group. My message to investors gathered here today: Nepal is a country worthy of your attention. MIGA can help you gain the confidence you need through its products, which we will be happy to discuss with you bilaterally in a great detail. Let's work together to make Nepal a hub for investment in infrastructure that improves lives, lead to sustainable growth, and deliver opportunities for its citizens. Malai Biswas cha Nepal ko Habisu Lamcha Hamisa Dinchel Taneba. Thank you very much.
Thank you very, very much, Ms. Honda, for your wonderful special address in this gathering, for setting the tone also for financing for infrastructure development. I would now like to humbly request our moderator for this session, Mr. Sujeev Shakya, to carry forward with the proceedings of the session.
Thank you. Thank you, Sadiksha. And welcome to this session. And thank you. It was interesting to hear from Ms. Kiko Honda setting the stage. I think we've heard of World Bank, we've heard of IFC coming to Nepal. And it's good to hear MIGA also starting to operate in Nepal. So my job is of a timekeeper here, a glorified timekeeper. And we are starting at about 3:40 here, and I'm ending at 4:45 is when I'm going to end. And we have 6 great speakers in the panel, and I'm not going to take time to introduce them. We're going to have some conversations. If possible, we'll take some interventions from the floor, only if possible. We'll see how it goes. So just to set the context of infrastructure, we are talking about Nepal. If we are talking about in 2030 for Nepal to become, say, a $100 billion economy and to become a middle-income country, then we need to create jobs, we need to have infrastructure, and we need to have a lot of things that will ensure that we can get to this 100 billion level. So in that case, I mean, if you look at some of the publications that have come out, and so infrastructure, if we are really to get to $100 billion mark, we need to invest another $114 billion by 2030. That's the requirement we are talking about. Whether it's be for roads, whether it's be for energy, whether it's be for railways, airport construction. So we are talking about some big numbers. And it's a big challenge because in Nepal, we just get so stuck with some small numbers and we get excited about small numbers. Here we are talking about billions. And in the panel, we have people who are, if they find the country is nice, they can come in with those billions. So without much ado, we are going to have a round of, the first opening remarks. And I'll be asking my panelists to start off from, what do they do, what their organization does, and to see that if they're doing something in Nepal, just to talk about it. So, and as I said, if you're just speaking for too long, I'm just going to intervene. Else, I think we'll just go on and move in a conversation style. So I was thinking of an alphabetical order because this is a country where there's too many protocol sensitivities. But then Don told me that he wants to go a bit later. And so maybe I'll start with Elke on my extreme left, Vice President and Head of Global Investment Performance Measurement at the Allianz Investment Germany. Elke, your opening remarks.
Thank you very much. Namaste. Thank you very much for the invitation for this conference. First of all, I would like to introduce Allianz and Allianz Investment Management. Allianz Group is one of the largest insurers and asset managers worldwide. We operate in more than 70 countries. Unfortunately, not yet in Nepal, neither insurance nor investment management. And Allianz Investment Management, it's the company I represent here, is a fully owned subsidiary of Allianz Group. We invest more than 607 billion euro mainly in listed bonds and equity, with a team of around 500 investment professionals. So the capital is coming from the insurance companies all over the world. So our key competencies are asset liability management, investment strategy, asset manager management, risk management, and monitoring and performance analysis. Why I'm here in this panel on infrastructure, you would now ask, when I talk about listed assets. We have a very low interest rate environment, as you know, in core Europe. Even in the US, a little higher interest, or we see there higher yields, but then we would hedge to back to euro. So it's actually not, it's an option. So we are invested in the US, but we mainly look for higher yields all over the world. So we diversify more and more in different regions. So out of core Europe, out of the US. We also started enhancing, investing in other asset classes and even other sectors. So we are now looking very closely on alternatives, alternative debt and equity investments. Alternatives means, well, real estate, but especially infrastructure and renewables. Why do we like infrastructure and renewables? Because they deliver long, stable returns to cover our insurance liabilities, especially on the life health side. And we like them also for the risk premium, the illiquidity premium. Illiquidity is not an issue we face, so we like this premium here. And we also like it for social impact. And therefore, I'm here in Nepal. Again, thanks for the invite. So the social impact is also important. So we look at emerging markets more and more. And we are at the start here, also at the beginning at learning. So it's nice to meet people here and to get connected.
Thanks, Elke. May I now go to Gert Finot from FMO.
Thanks, Sujeev. My name is indeed Geert Feyenoord. I work for FMO, the Dutch Development Bank. I head the Asia team that's responsible for energy investments within FMO. I think we have already an experience of quite a few years in Nepal. We currently have 4 investments in Nepal and countless indirect investments. I think, for example, FMO has a 17% stake in NMB Bank, which is one of the leading banks in Nepal. Another important investment that we have done is in the Lower Solu hydropower project near Phaplu in the Himalayas. And besides that, we have, amongst others, also invested in the Dolma Impact Fund. Having said that, I think we're still looking to add to our investment portfolio within Nepal. We have currently invested around $50 million and committed to another $50 million, so that would be $100 million plus, hopefully by the end of this year. Ms. Honda already talked about Uppertershuli 1. We hope to be part of that lender group as well. But FMO is also a bank with a mission, and that mission is about creating impact in the countries that we are working in. We are only working in emerging economies, emerging markets, and part of our remit is also to make sure that whenever we do investments, it also leads to social inclusion and environmental high standards. And maybe good to say, we are a development bank. Yes, we are partly owned by the Dutch state. That's also true. But we're also a commercial bank. And commercial banks, as you know, want to make a profit. So that means that the investments that we do actually have to give us a return. And the investments that we have made actually do give us a healthy return. So in that sense, we are not... our rates that we supply, our interest rates are commercial rates. but we still feel that there's enough out there in Nepal to do in the future. Thank you.
Thanks. Thanks, Gert. May I now move on to Nishant Kumar, Regional Director, South Asia for Garanco.
Thank you. Thanks, Sujeev. So, hello, everyone. One thing I was telling people this morning that probably after this summit, I'm going back with almost $500 million of pipeline, you know. So I don't know, I mean, if it's, how much of that pipeline is going to materialize, that's another thing, and we'll discuss it another day. Jokes aside, over past 2 days, I've had a number of meetings with both with regulators, bankers, sponsors. Been very productive day last 2 days. Now, for those of you with whom I've already spoken to, I mean, please bear with me for sounding like a broken record. But in short, I work for Garanco. I head the South Asia division, and we are a DFI, Developmental Finance Institution. We are owned by 5 governments. Government of UK through DFID is the largest funding provider. Netherlands through FMO, Sweden, Switzerland, and Australia. We are credit guarantee providers, so definitely not insurance. Our guarantee is unconditional, irrevocable, on demand. So it works very differently from a typical insurance product. We de-risk financial institutions, not mitigate their risk. And some of you would probably be able to understand the difference between de-risking and risk mitigation. Our support comes in various forms, either guaranteeing bank financings or guaranteeing capital market instruments, that is essentially bonds. We operate currently across 18 countries in Africa, Southeast Asia, South Asia, and the Pacific. And to date, we have underwritten almost 50 guarantees across these regions. And in Nepal, we are, as FMO, we are present in Lower Solu. There, now, since we are not a funding provider, we are guarantee provider, so we help build capacity in the market and crowd in private sector. And we can discuss how we can actually do it. And there, I see a lot of potential, but that potential needs to be harnessed into kinetic. That's all. Thank you.
Thank you, Nishant. Next speaker is Samuel. Samuel Joseph is the Chief General Manager of Exim Bank India.
Thanks, Sujeev. And it's really a pleasure to be a part of this. I thank the organizers for having invited Exim Bank to be a part of this summit. I work with Exim Bank of India, as I already mentioned, based out of Mumbai. Just to introduce Exim Bank, we are the official export credit agency for India, 100% owned by the Government of India, and we have 3 basic verticals or products. We work with Indian corporates who are predominantly export-oriented in their turnover. We also work with overseas buyers for buying Indian products and services, especially the long-term export credit for project exports from India. And the third vertical is the G2G, the government-to-government business, which we handle. In Nepal specifically, we work under the G2G, under what we call as the lines of credit. We have been in this country for many years now, and our total commitment under the lines of credit here is 1.65 billion today. It was about $2 billion in 2017. About 400 million of this was converted to a grant for the earthquake reconstruction work being undertaken by the government of Nepal. And today, the loan commitment by Exim Bank of India in Nepal is about 1.65 billion. In Nepal specifically, we work in 3 sectors: infrastructure, all related to infrastructure, road sector, hydroelectric power sector, and power transmission sector. In hydroelectric power, we have done the Devigarh power project, the Rahugarh power project. In transmission line, many transmission line projects, specifically the Koshi transmission line project, which by itself is about a $90 million exposure for us. We are also looking forward to work in the housing sector under infrastructure development with the government of Nepal. These loans are concessional as an export credit agency, and considering the friendship between India and Nepal, we give it at concessional terms. However, like my other colleagues mentioned, we are a commercial agency. So the government of India makes good the commercial rate to us through a subvention under the budget allocation from the Ministry of Finance. We also have private sector exposures in this country. They are not as large as the G2G business what I just spoken of. Those are commercial, and like any other commercial bank, we look at the risk, the tenor, and work out the interest rates. We are very keen to develop our private sector exposure as well in Nepal, working with private sector in Nepal and Indian companies, the Indian private sector which invests in Nepal. I'll stop here and look forward to the discussions. Thank you.
Thanks, Samuel. I'll move on to Srini. Will make your opening remarks.
Thanks. I'm Srini. I head Asia for CDC. CDC stands for Commonwealth Development Corporation. Now we are now called CDC Group PLC. We are wholly owned by the British government. Our shareholders are DFID. So we got a $6 billion balance sheet of British taxpayers' money, which we invest in South Asia and Africa. And our whole objective is to make sure that we build sustainable businesses and strike a balance between being developmental and commercial. And our money is invested in three forms. One is the fund of funds. We support a lot of fund managers in various markets, and we have our direct investing strategy. We have our debt and structured finance products as well. The idea is to make this more product agnostic, to make sure whatever fits into the business, we try and support them. We invest in various sectors, which is consumer, industrial, financial services, and infrastructure. Infrastructure is a very key portion of what we do. And we are slightly unique as a DFI that we have two subsidiaries. One we own around 70%, which is called Global Ec, which is based out of Africa, jointly with Norfund. We are the largest power developers in Africa with around 1.5 gigawatt in 8 power stations in 6 odd countries. We have a subsidiary in South Asia called Ayana, which is also a joint venture with the British government fund and also the Government of India fund, really. The idea is to try and develop. The reason why we have our own entities in these countries is to try and make sure that we are able to build these in the most difficult parts of South Asia. Number one. Number two is to build sustainable businesses and in the most orderly manner and with very high governance and practices. The last point I just want to say, Nepal is a very important destination for us. We currently have around $15 million, but we have a pipeline of $100 million. We do want to invest more money, be a long-term provider of capital, and bring in. And one of our other biggest themes is in terms of mobilization. It's just not providing our capital, our ability to mobilize third-party capital, which is very important for us. And our ability to bring in the third-party investors to invest into Nepal under a capital structure which is much more palatable for infrastructure will be a key part of what we are able to do.
Thanks, Srini. I think I'll just move on to Don, because I think I've also got him, as his request also in the end, because we haven't seen AIB. It's just a newly formed organization, and we haven't seen it yet very active in Nepal. And it'll be good to also not only hear a bit about the introduction, but also how they are looking at Nepal. Yeah, Don.
Thank you, Sujeev. Good afternoon. My name is Don Lee. I'm a Director General, Investment Operations for AIIB. And I asked Sujeev before this moderation that AIB to be the last because we're still new. So some of you know about us, but I'd really like to take this opportunity to give some introduce the AIB's activity because we are still new. So I appreciate this opportunity. AIIB is an Asian infrastructure investment bank. So you can say we are only doing Asia and infrastructure. Very simple. So this is very relevant in this, I think this is a forum, an investment forum, especially for Nepal. We established 3 years ago, so it's very new. We have a headquarters in Beijing, and we have only one office, so very small still. And we are also MDB. MDB means Multilateral Development Bank. So we like World Bank, IFC, AIB, AIDB, and EBRD. We are one of those families. We have 93 member countries, and about only 200 staff, and it presents 40 different nationalities. And up until now, we got a board approval about 35 projects amounting $7.5 billion. Where subscribed capital is 100 billion US, but paid-in capital is amounting 20 billion US dollars. Nepal is, of course, a very important member country. And we are rated AAA, and we are even plan to issue bond to be the part of benchmark of this multilateral capital market activities. As I mentioned, we are doing only Asian region and infrastructure. When we say Asia, means we are different from World Bank or IFC categories. When we say Asia, means from Turkey to all the way to Asia, including Russia, CIS countries, even Pacific, Pacific Islands. So quite large region. And transportation, energy, water, urban development, ICT, and some other selective basis manufacturing is also included. And like other MDBs, we are very keen on this sustainability and the connectivities. Our products is twofold. One is a sovereign-backed financing and the non-sovereign bank. Non-sovereign bank means private sector. So you can see us like a combination of World Bank and IFC. We do both. So, even we are small shop. Most our product is a debt financing, project financing. We still invest in private equity fund and selective basis equity. Our lending is the limitation is up to 35% of total project cost, and the typical check size is between $30 million to $500 million. Those are our sweet spot per project. And what we can offer is a very long-term tenure. Sovereign case 30 years. Private sector case up to 18, 20 years. And we, by definition, we have a very good government relationship because they are most of our member countries. And we have about $130 million special fund. Special fund is for the project preparation. If there's any demand from the emerging markets, we like to support this, providing this aid money for the project, the banker, the feasibility study and the bankability preparation fund we are now engaging. And we can still make financing up to 15% to so-called non-regional countries. In fact, we have one project in Egypt, solar project. Up to now, we are only providing financing in the hard currencies. It's mostly US dollars. Now we are working on providing facility for local currency, including Indian rupees and major countries. Hopefully sometime this year or sometime next year. The rate is US dollar base on floating rates above LIBOR, 6 months LIBOR. Like other MDBs, we are very keen on the emerging social guidelines, and we impose the procurement procedures. And we don't offer any subsidized pricing, no concessional, no branded financing yet. So it's pretty much straightforward bank finance, such as other commercial players, because we don't want to crowd out, the private sector participants. Pretty much it. One thing I like to kind of point out is wherever we go, have a lot of questions regarding one belt, one road, which is very important agenda. Wherever we go, some people ask us, AIB be a part of one belt, one road, which is very relevant issue, but at the same time sensitive issue. My answer is no. Actually, yes and no, but no is bigger portion than yes. The thing is, we are multilateral, so we have an independent board. Every single project goes to the board approval, and we have about 37, 40 projects. Only one project in China, which is Beijing Gas. So you can tell we are very independent and we are very neutral. But at the same time, we are also pursuing the connectivity and the sustainability, which happens to be in common with our One Belt, One Road. We are not Polish bank, not Chinese Polish bank. So I'd like to kind of assure you, we are acting like other MDBs. I mean, like the Chinese agenda is not our priority. But if it happens to be the Chinese involved the projects, that's fine with us, not the other way around. So I'd like to mention that. I think it's worth mentioning. So that's pretty much it. Thank you.
Thank you. Thank you, Don. That is very useful. And hopefully by the end of the year, we would see an AIB office in Kathmandu. So I think one of the key messaging we got, in Nepal, because we are so used to getting free money, we always think that if you see an international organization, there is going to be free money or money at very low interest rate. But everybody sitting out here is here to do business on commercial terms, and they are going to give you money and invest only if it makes sense. I think that's a common message we heard. So I think I've just been told by the organizers that I have just got half an hour to wrap up this session. So I think best would be that I'm just breaking up into 3 groups. We have a group like FMO and CDC and Exim Bank, which are already in Nepal. And then we have AIB and Allianz, which is looking at Nepal, and Guaranco just put their foot in. So maybe if we can just divide it that way, and I would ask about the experiences of folks who are already invested in Nepal, in Exim Bank, FMO and CDC, to share what has been some of the, what you have liked about Nepal and some of the challenges. So a quick 3 minutes. So maybe I'll start from you, and then I'll just move there.
I think it is not often that you find in a country a combination of very, very good solar resource and abundance of hydroelectric power that's available to you. So Nepal has it all in terms of natural resources, and I think that's basically what we like very much in Nepal to start with. I think the other thing that Nepal definitely offers is people who are eager to learn, people who are eager to work hard, and are really willing to bring their country a few steps ahead. The challenges that we faced, I think when we started with our Lower Solu hydropower project, I think the transaction cost of doing business is actually quite high here in Nepal, and that you see that in various ways. I think when we started, when we needed to get money out of Nepal, the daily limit was around $10,000 that could be taken out of Nepal towards the Netherlands, and we actually had to sometimes do payments over a 2-week period to get actually the money out that we really wanted to get out. I think those are the things that we encountered when we got here. And some of those things actually have improved. I think it has become better in that sense. But there are still some issues, and let's start with the very easy ones. I think a lot of the legal documentation is not available in English. It's available in Nepali, and I think that is for a foreign investor that is an issue. And I think it might make sense if you really want to attract large amounts of foreign direct investment, and that is also what we see in the countries surrounding Nepal, that English is actually the language of choice to do business in. And I think that will definitely help a lot in understanding each other and in communicating with each other. I think in the end, what helps is having a very good partner. And I think that is also the reason that why FMO really would like to stick with a Nepali partner when we do business. In terms of Lower Solu, that is clean development, the clean development company or in the NMB bank when we do business with them. So to tackle the challenges that we face, we simply look for good partners, and then I think in the end we've managed and weathered the storm, and I think we're now quite used to doing business and work here.
Thank you, Gert. Srini?
I think what fascinates me in the country is the human capital and the talent available, and it's quite underexploited to a large extent, and especially the power of women in the country, which I feel we must bring it up. That's what fascinates me. From an infrastructure point of view, I feel that we as institutions should help the government become enablers. We should not complain about the government not doing much, in my view. What do I mean by enabling environment is fundamentally to create, so what do infrastructure developers require? We are actually utility scale developers ourselves. We got 1.5 gigawatt in Africa. We got 500 megawatts in India going up to 300 gigawatts. So we do power utility development. What we require is, we require an enabling environment. We require execution, and we should be able to execute it, implementation, off-take risks, really. So I think what we need is to help the government mitigate these risks. For example, in other countries, government established the solar parks, where they put together the entire park with complete approvals. We don't have to go to do the land aggregation, really. And they also facilitated the offtake from there. We don't have to go through the entire offtake agreements, etc. And signing up to PPAs, which will be honored, really. I think, the dollarized PPAs are unsustainable, really,
sure.
As we know. I think we need hedging policies where the government feels, completely, comfortable in doing that. Expecting the governments to sign PPAs in dollars going forward, I think it's a difficult task, honestly. So that's the second thing. And the third thing I just want to say here is that the financing structures, I think the country does not have long-term sources of financing. I think it's the biggest glitch we have today. If the capital structure is not adequate, I don't think infrastructure projects will generate returns. It should be adequate debt and equity component. Equity component has to, where the government can be an enabler. They can set up an infrastructure fund where the long-term providers of capital can come and subscribe to those funds. And as far as debt is concerned, we need instruments which are dated 15 years type debt, where I think the institutions like us can provide partial guarantees and some credit enhancement support. Number one. Number two is we have to mobilize private capital into it through insurance companies and through the pension funds. We need appropriate rating for these instruments, really. So unless we are able to create an appropriate capital structure environment, infrastructure is very hard to take. So my final point is, this enabling environment has to be thought through more comprehensively, as opposed to in a very, very disjointed way. Because even if you look at power or ports, sorry, not ports here, roads, etc., the same problem will come. So I think people like us are enablers with the government to work with them in this.
Thanks, Srini. I'll move on to Samuel. And Samuel, you may want to also just emphasize a bit on, when you talk about concessional, what is the difference between the market rate and the concessional? What is the difference? You may not want to disclose it fully, but just to understand that it's not free. There's a little difference. So that, just emphasizing on that in your experience in Nepal. Yeah.
Thank you, Sujeev. First, let me try to answer this question based on our experience in infrastructure development in this country.
Sure.
And taking on the number that you mentioned in your opening remark of 100 billion required by 2030. Now, this infrastructure projects could fall into two categories. Economically viable infrastructure projects and also social infrastructure projects which may not give an economic return. First, let's look at the economical infrastructure projects. A power project, for example, is economically viable infrastructure projects, a no-brainer that way. For Nepal to achieve such infrastructure project investments, I think an enabling environment, especially in the PPP, it's not just a PPP legislation, but a support system which creates, for instance, business support services of legal firms here, accounting firms here, a whole host of ecosystem in order to enable a PPP environment is a must for such infrastructure projects. The next one is procurement guidelines and procurement discipline, because if we are talking of attracting large investments, any country needs to have very transparent and very efficient procurement guidelines. Now, it should not look like sermonizing from India, because we are also on the same path. We have improved our system, but a lot more distance to be covered even in India. procurement for infrastructure projects is another very, very key deliverable from the government of Nepal through legislation. Third one will be the contract enforcement. The arbitration, contract enforcement itself, while laws may be there, enforcement of that through the judiciary, that perception that contracts can be enforced in this country. I think this is a common problem across South Asia. But we need to work on this if we need to attract serious money into our countries. Coming to the social infrastructure projects, for example, a rural road. Incidentally, Exim India works both in economic infrastructure projects and also in the social infrastructure projects. A rural road may not be based on the business model which is prevalent in this part of the world. Is not, cannot attract commercial funding. But what is lacking in our experience of having worked with such projects, especially in Nepal, is I think if we invest a little more time at the planning stage of such projects rather than just announcing and starting implementation and then getting back to the drawing board of the project specifics, a little more time at the time of project implementation in preparing detailed project reports. For example, I don't think any serious player is here in a project development company which will prepare a project report, detail all the nitty-gritties of the project, which will also help not only in implementation but also in monitoring the progress of the project. For instance, in India also we suffer from the same lacuna. When a project is funded by JBIC, Japanese bank, for I think a gentleman is here also. When a project is funded by JBIC, we have always seen they spend 3 years, 3 years in just in project planning stage. But after that, the project implementation is so smooth. I think that period for preparation of the project report is well worth spent.
Thank you. I think the concessional loan part, if you could just reflect on, what is the difference between the commercial and the concessional you talk about?
The government of India makes the subvention through LIBOR plus 150 basis points to us.
Thank you.
That's the concession.
Okay, thank you. That's very useful. So I think I'll just, some of the key messages that have come in, and then I'll just do some wrap up. But I think what Samuel was talking about, planning of projects being important, and all of us who fly in and out of Kathmandu airport just realize that very well, as to if you don't plan it well, what happens. So, and I don't want to emphasize more, but that we see as an opportunity. So I'd just like to move on to Nishant. You're halfway there looking into Nepal. What is one thing that you really liked and 2 things you'd like to improve?
Look, as I said at the beginning, we are a credit guarantee provider. So, and for infrastructure projects. So, there is no other sector that we look into but infrastructure. And we also like long term, so we can go as long as 16, 17 years or even 18 years. In fact, in Lower Sulu, based on our guarantee, it's the first ever 17-year loan, in local currency, in Nepalese rupee. And we work towards crowding in the private capital, private institutional capital. We don't want to crowd out, and that is through credit guarantee schemes. So, what I have been hearing over past 2 days and also over past several months is the issue of liquidity with local banking system, right? And as we see, everyone is talking of infrastructure development, building roads, building power plants, but where does that credit supply going to come from? Are the banking local banks capable, or do they have capacity? It's not about capability, but capacity to actually provide or address that amount of credit, and that's number one. So how to address that? One of the means that we thought could be addressed is, help these local banks to raise, a capital based on credit guarantee from us, from Singapore. I had this discussion with the central bank yesterday. It remains to be seen how much it is implemented, but they were very receptive of the idea, and Indian rupee is pegged to Nepalese rupee. Has anyone broached the topic of borrowing in Indian rupee to help, to bridge that gap? There is availability of credit in Indian market. Yes, Now is a different situation, but has anyone broached that topic? So, these two items, I believe, can be an important avenue. And then, even in domestic market, test 100 crore or 150 crore, 100% guaranteed bond, from us, for either a banking institution or, for a corporate. And there's so many, small run of the river hydro projects, right? One can even look into issuing a green bond out there, right? And there is a pool of capital in Europe. There is a pool of capital in Asia as well, sitting out there for looking for quality green assets. So, yeah, I mean, that's basically it. I can go on and on, but
that's very useful, because I think also Nepal, because of its fragility in terms of its environment and the challenges, I think it's important to really have the green lenses through it to see that how do you raise capital through new modes of green bonds. So I just now want to move to the second set of people. We have from Don from AIB and LK. In terms of, you're looking at Nepal, and perhaps if you'd like to start off in Nepal, what are the two things you'd like to see to happen in Nepal? You're doing your studies about Nepal, but what are the two things you'd like to see happen for you guys to start looking at Nepal very seriously? LK, you want to go first?
Yeah, thank you very much. As I said before, I mean, we have quite some capital and we have pressure to invest with attractive returns. So, but we are also risk averse. So we are risk managers as an insurance company, but risk capital is very expensive. What we basically do, looking at those countries, because it's also, as I said before, quite new for us, that we look at infrastructure investments in emerging markets and frontier countries, that we seek for cooperation with the FIs. This is definitely the case. I mean, I said before, we are invested in around 70 countries with 500 experts. So we cannot be expert in every single country here on the world. This is clear. So the expertise is in the development banks. So we seek partnerships here. And as I said before, we like their risk mitigations. So with the MIGA and IFC, we already did a first investment in emerging market infrastructure debt. Also our risk appetite in currency, is not high, so we would prefer a hard currency risk. We like taking over the political risk by MIGA. And also even part of the credit risks. So we prefer also first loss contracts. This is a business we just started around 2 or 3 years ago, so it's also pretty new for us. And this is why I'm basically here to get those connections. And as you said, for Nepal, what I really liked, what I hear I have been here last year as well, and it's amazing what happens on legislation and what the government is doing. Core is definitely political and legal stability.
Thank you. Don, you want to
Thank you.
share your thoughts? Yeah.
Again, with the limited experience as presence AIB, since I joined this forum, it's been 2 days, and I participated in several sessions. But I saw definitely strong commitment and the intention, not only by the government sector but also industry and the financial sector here. So we should say this is a significant improvement in sentiment, especially like a regulatory streamlining. And we saw the new PPP registration came out. This is definitely the positive signs and directional, the approach the government is taking. But at the same time, we still see some improvement has to be made. Again, this is limited the experience, and shared by some of my colleagues here, which is still some timeliness of approval, especially the loan is made and up to the final stage of the financial closing. I noticed this country has a two seasons, right? Rainy season, dry season. If you miss the timing of this loan agreement, we're talking about 1 year delay, the following year. That is one typical case what I heard. And some tax treatment. We saw a lot of improvement in tax deregulation, but written regulation but actually, if compared to what's happening in the field, actually, some withholding taxes and other taxes still exist. And this is we cover several colleagues here. The repatriation regulation, which is the FX control, which is understandable, but still there's a lot of the difficulties we find. We talk about, let's say, one-time sharp approval. That's what we like to see as investor friendly, but still there's a several segments. So this FX control. So basically, international standard of international financing frameworks, I think, is very, very key for the overseas investors to deal with this down the road. Actually, I can mention that the UT1 project, which we the MIGA mentioned. Actually, this is a very important project. AIB is in now the almost final stage of approval. IFC ADB co-financing, and of course FMOs and backed by the MIGA. I hope this is become a very successful example to get a smooth landing of the financial closing during this year. So hopefully this set the benchmark for not only for the MDBs but other foreign investors from our side.
Thank you, John. I know just being, again, time flies, so I think we have a moment for our final comments, maybe 60 seconds to 90 seconds. Gert, I know you had something to say. Anything you'd like to say? Any country comparatives you want to bring up? Any final message you have? One final round.
Well, I think is it on? Yes, it is on. Okay. I think I just want to react briefly to what Srini was saying about dollarized PPAs. I think in the core, I fully agree with you. I think if you look at FMO's balance sheet, around 20-25% of what we do is in local currency. And I would love nothing more than be able to do NPR loans within Nepal. But I think at the current situation, that is with the hedging situation, that's actually pretty difficult. And I would think that for a certain amount of time, it may be 5 or 10 years, but it would be helpful if not only the larger projects over 100 megawatt, but also the smaller project would be able to have a dollarized PPA. And of course, then the question is, how can we, or Nepal can manage its US dollars, and then the fact that they are in hot demand. I think we should be able to, I am not a big fan of concessional funding or donor funding, but it should be able to have some sort of a backstop hedging fund funded by IDA money or World Bank money to basically get Nepal to the first 5 to 10 years of this growth in infrastructure, and then slowly build that down, and then we can maybe have NPR PPAs as well. But I think for the short future, I think a dollarized PPA also for the smaller projects would make sense to attract foreign direct investment.
Thank you. Srini?
I'll just make 3 points here. Number one, government can make use of the presence of institutions which have done this in other countries. I mean, $100 billion is, over a period of time, is a pretty large amount. We have to be more creative in terms of our capital structure and our debt raising structures, and there are institutions who are willing to support. Number two is about social infrastructure, which cannot be ignored, healthcare and education. And those are the genesis of how the country develops. And I think Nepal can do a lot in terms of vocational education and skilling, which institutions like us are willing to support. On the core healthcare side, if you can arrest medical tourism and conserve your very precious foreign exchange, that will be very valuable. Those are the 2 things.
Thank you. Nishant?
So, 2 things. One is, in most of the countries where we do business, based on our, we are AA rated internationally, right? So in local currency terms, we are easily AAA. And based on our guarantee, the banks, local banks, are able to get capital reliefs, freedom from general provisioning, which helps them to lower the funding costs for a project. Now, when we want to guarantee a certain bank, we also want that thing to be incorporated into pricing for the local bank. So we would want that to be implemented here, number one. Number two, as I say, and maintain, newer sources of financing is order of the day for infrastructure. Bank financing just cannot be sustainable enough for infra. I mean, Garanco guaranteed first ever 7-year INR, offshore INR bond last year. First ever 10-year peso bond last year. We are working on a Bangladeshi taka bond. Now, there is no reason, again, even if it is for 2 years or 3 years, there's always first time. It can be a pipe dream, but why can't it be done on an INR/NPR basis for a Nepalese bank or Nepalese institution?
Thank you. Samuel?
Let me just bring in a data point here. I was looking at a World Bank report of the potential for hydropower energy in Nepal itself. Since we are talking about infrastructure, let me talk about power sector in particular, and within that the hydroelectric power. 80,000 megawatts potential, of which 44,000 can be commercially viable. But what has already been implemented is less than 3% in this country. Since you asked for country comparative, let me take another much smaller country, Himalayan country, Bhutan. The way they've used their hydroelectric power potential, and they have large projects exporting power to India today. So the question is Nepal really exploiting its geostrategic position, being located between two large economies? Is it really exploiting? Let me end with a question there.
Thank you. Don, any final comments you have?
Yes. My final comments is this. This may not be the official or AIB's standpoint. I'd like to share with you my personal experience, because it's the first time being here in Nepal 3 days ago. And I think I compared to say this before I go, so I hope you don't mind. We took the trip to the UT1, which is upper Tishuli site. We are told it's 70 kilometers. And from airport, we just go there, and took us 4 hours. And it was actually 5, including rest area. So the road was not that, it's not the average even standard. We are talking about major highway from the capital city to that. We are talking about 70 kilos in China, less than 1 hour. So I end up staying in the local hotel and overnight. Then we have to come back following day. We are talking about one site, just simple visit, and it took 2 days. Again, this is my personal. So maybe from outside, this come first time experience. So maybe give us some fresh kind of impression. But in my opinion, I think that it has to be done as some kind of priority. I think it's national. I think it's very critical. Whatever we talk about tourism, we talk about industry, we talk about even power. If there's no proper road in place, it's not going to work very, very smoothly. Again, it's like a broad vessel. What the road means is moving people and goods around. So again, maybe I'm wrong. I maybe short, just impression, but I really hope that the Nepal, I think, take it as a kind of critical issue to set the kind of priority. Again, my apologies if I may be too blunt, but I think that's my personal experience. Thank you very much.
Thank you, John. Okay, you have the final word.
Thank you very much. In my perspective, there's a lot of potential in infrastructure, and you have a great asset. The assets are the people, the Nepalese people, educated people. You should build on. Legislation seems to be in place. I think what is important is effective bureaucracy. So go for implementation, and we would like to be a partner, but together with our partners with the DFIs, I think we could be, we are ready to connect and to look at it more closely. Thank you.
Okay, thank you. So this has been a very interesting panel. I think a lot of things came out. We talked about enablers. We talked about sort of the need for planning. There is an issues related to hedging, more technical, but very important in infrastructure financing that came up. But I think we need to continuously think about how can we leverage the fact that we are pegged to the Indian rupee, and how can we sort of hedge our risk with the currencies also. There were issues that were raised also on the contract enforcement part of it. I think that's having a reputation to deliver good, sort of legal judgments and implementation is always important. I think the issues that were raised also very little talked about was also about English. Yesterday when the minister from Myanmar was speaking, I was tweeting to say that in Myanmar when you do business, I think Ambassador Bimadas would be here, 99% of the stuff is done in the local language. But if you look at their ministers and bureaucrats, they are very, very eloquent and they're very articulate when it comes to speaking. So I think these are things that we need to look at. Also one big sort of issue that is brought about, not talked about, is the business development services. If you're asking people to come with $500,000 or $1 billion of investment, what is the type of legal firms they would look for? What is the type of accounting firms would they look for? What is the type of consulting firms they would look for? So I think we need to, along with opening up a lot of other sectors, we have to think of what needs to be done, because that's going to be very critical. But I think in the end, it's always music to the ears. In Nepal, we keep on having events where we talk about how to implement a $600,000 donation. From there, we are talking about how we can leverage the trillions of dollars here in the room. A round of applause to the amazing panel, and thank you very much.
Thank you very much to our moderator and our wonderful panelists for such in-depth insights and experience sharing. I think in this Nepal Investment Summit, over the past 2 days, we have shown you areas of investment in Nepal. We also went further and showed you the various feasible investment-ready projects in Nepal. And with this session, we showed you where to get that money from to invest in those projects in Nepal. So definitely a round of applause for our moderator, for our panelists, and to present them a token of appreciation, I would like to request Honorable Minister for Finance, Dr. Yuvraj Khatiora, to join us on stage and present the token of appreciation, firstly to our moderator, Mr. Sujeev Shakya, CEO, Bead Management. We'd also like to thank Ms. L.K. Pfeiffer, Vice President and Head of Global Investment Performance Measurement, Allianz Investment Management. Thank you, Ms. L.K., for your wonderful insights and participation in this panel. We'd also like to express our gratitude to Mr. Don Lee, the Director General of Investment Operations, Asia Infrastructure Investment Bank. Our gratitude to Mr. Samuel Joseph, Chief General Manager, Exim Bank, India. We'd also like to express our gratitude to Mr. Nishant Kumar, Regional Director, South Asia Guarantco. Thank you very much, Mr. Kumar, for being a part of this session and being in the panel. We'd also like to thank Mr. Srini Nagarajan, the Managing Director and Head of Asia at CDC India. Ladies and gentlemen, we'd also like to thank Mr. Gert Finau, Head of the Asia team at Energy Department FMO from the Netherlands. Thank you so much, Mr. Gert, for joining us in this session. And now, along with the moderator, all the panelists, and our minister, I would request all of them for a group photograph. I would also like to inform all our guests that we will start with the closing session in just a few minutes, and a humble request to the delegates who are seated in the front 2 rows to kindly vacate those front 2 rows for our distinguished guests, honorable ministers who will be joining us for this closing session. Apologies for any inconvenience caused, but I definitely see a lot of empty seats in the middle as well. So I hope our delegates who are seated in the front 2 rows would not mind this humble request of vacating their